What's your take as to, in the longest standing bull run and in the historic quantitative easing and low interest rate environment we have today, gold, has it failed? It's down 10% in the last year and it's negative for the 10-year.
Yeah, well, first of all, you have to look at where it was 10 years ago, because 10 years ago, right, it was at a record high. And if you go back 10 years earlier, gold was under 300. So if you go back to the beginning of this century or this millennium, right, 2000, gold is still beating the S&P. So, the time frames can be, very deceptive when you look at things. But gold is higher than it was, 5 years ago. It's moving up. It's not moving up as fast as some people may have hoped or may have expected, especially in light of these, inflation numbers. But what's really going on right now is that gold is actually a victim of higher inflation instead of a beneficiary. And that's because the big money doesn't believe that there is an inflation threat that needs to be hedged, because they believe the Fed is going to fight inflation. And they believe the Fed will be successful because the Fed says that they will. And there's an old adage on Wall Street, don't fight the Fed. And so nobody wants to fight the Fed. The Fed says it's going to fight inflation. Everybody believes that's going to be negative for gold, because an inflation fight means tighter monetary policy. It means you end quantitative easing, you raise interest rates. And it's the belief that all this is going to happen that is pressuring the price of gold right now. Now, I think everybody is wrong. The Fed is not going to fight inflation. And even if it tried, it would lose. And so people should be buying gold, not selling it. And at some point, they will figure this out, either because they get smart or because the Fed actually has to confess that it's not going to do anything about inflation. Right now, it's bluffing. But at some point, it may have to come clean and admit that there's nothing it could do, because the only way the Fed could fight inflation would be to crash the stock market, crash the bond market, crash the economy, do all sorts of things that we know the Fed is not going to do. And in fact, while everybody expects the Fed to start tapering its asset purchase program, if these new spending bills get passed that I just mentioned, the infrastructure bill and this $3.5 trillion bill, if these two bills get passed, the Fed is actually going to end up expanding its asset purchase program. So the markets are going to get the opposite of what they expect, and the Fed is actually going to be doing this even as inflation is getting worse. So instead of putting out the fire, they're going to pour gasoline on the fire. And when people, figure this out, that's when you're going to see a spectacular move up in the price of gold.
So when we look, this is a chart from a couple of days ago that shows the 10-year was at -3. I looked at the gold miner, the Van Eck Gold Miners ETF, and it's down since 2006 as well. Is the thought process that it worked for a while, let's say through 2011, gold hit an all-time high. Obviously, there was this massive increase in something like the Van Eck Gold Miners ETF as well. And then now the miners are also suffering from the exact same thing that you're talking about with gold, where people just don't believe inflation is real or going to stay here, and the Fed's going to fight it, and therefore gold doesn't have a place in their portfolio?
Yeah, in fact, the miners are having an even bigger problem, because the miners don't reflect where the price of gold is now. Because if people believed the price of gold was going to stay here, the miners would be a lot more expensive, because even the current price of gold is very profitable for a lot of these gold mining companies. The problem for the gold miners right now, and obviously the opportunity for anybody who wants to buy them, is that gold stocks, like all stocks, don't reflect today's earnings. They reflect expectations for future earnings, and this is the present value of what investors expect those future earnings to be. So since investors expect the price of gold to be lower in the future because they expect the Fed to be successfully fighting off inflation, the market is already pricing in a drop in the price of gold and reflecting those lower expected earnings in what they're willing to pay today to buy these gold stocks. So that's an added opportunity, because not only are they wrong that the price of gold is going to fall, it's actually going to go way up. So none of that is being factored into these gold stocks. And if you look at gold stocks, I mean, typically the major gold mining companies on a PE basis, they normally trade at a premium to the market. Now they're actually trading at a discount to the market. You have gold companies that are growing their earnings and raising their dividends. Look at Newmont Mining is one of the highest yielding stocks in the S&P 500. It's the only gold stock in there, but it's one of the higher yielding stocks. I mean, that's normally not the case. So these stocks are very cheap. They reflect the mistaken belief that the majority of investors have with respect to inflation and the Fed's ability to fight it. And of course, this is a bubble. Nobody wants to buy real businesses that make money. This is all about fantasy. People buy pie in the sky. People buy potential. They buy hype. You got meme stocks. You got all kinds of crazy assets, including your favorite asset, Bitcoin and cryptocurrencies. That's what people are buying. They're not buying real stuff, right? They're still in fantasy land. But eventually they're going to have to deal with reality.
I think that gold was a meme asset and that meme is over. It got retired.
No.
The meme was that it served as an inflation hedge. Inflation's here. Now it's failing.
Look, no. Well, gold was never a meme. Gold actually has real value in 5,000 years of history. Memes are all about hype and promotion. I mean, that's not what you have when you have gold. But yeah, I mean, that Bitcoin or these other things are meme currencies. Look, you have a perfect marriage. You have a meme stock, AMC. It's a meme stock because, it trades on hype, not on the reality of its failing business model. But what are they doing? You talked about it yesterday. They come out and say, oh, we're going to start accepting Bitcoin for our tickets. Knowing that no one's going to buy a movie ticket with Bitcoin, apart from the fact that the transaction cost would be too high to buy a $12 item or to buy some popcorn with your Bitcoin. None of you Bitcoin holders are going to part with your precious Bitcoin, for some popcorn, right? You're going to spend your fiat.
Listen, I just learned two things about you. One, you watched the show. I appreciate you watching the show. And two, you just called Bitcoin precious. So we're making progress here.
In your mind, it's precious. In my mind, it's worthless. But I know you're not going to part with it, for a movie ticket. But AMC knows that too. Why is AMC making this ridiculous announcement? Because they're hoping that the crypto guys will see this and now start buying shares of AMC. But then you came out, right, and you said, hey, this is all meaningless. What they need to do is go into the market and take that money that they earn by selling their overpriced shares and take that money and buy overpriced Bitcoin and stick it on their balance sheet. So they can turn this thing, AMC into another MicroStrategy. Put it on the balance sheet and get more crypto people to then want to buy into this nonsense. Look, this is what happens in a bubble. And by the way, gold is real money, right? In a bubble, assets are overpriced. They're overpriced in terms of real money. The way this bubble is going to deflate because of all the fiat that's going to be created, you're not going to see these assets crash in terms of dollars, although some of them, like AMC, eventually will, or the cryptocurrencies. But the overall stock market, the way it's going to crash is with the price of gold going way up, not stocks going way down. And so the gold value of these assets will come down, and that's how the bubble deflates. But right now, people aren't buying gold because they're still chasing the bubble. But when the bubble pops, the money goes back into gold.